Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, November 4th, 2019. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. But first, I do have a quick update here. I know last Friday I mentioned that I would be hosting a monthly market outlook this week and after the market today, but instead I am moving that to Tuesday. So I am looking to host the monthly market outlook after the market closes Tuesday. So after tomorrow's market instead, so we will be pushing it by one day. But we will host that tomorrow, so please join me. It's free and open to anyone who wants to join. We will be prospecting for candidates for the end of the year and also analyzing various markets, including futures and stocks. So please join me tomorrow afternoon, and I will also send out additional posts and tweets as well. Alright, here's a look at the ES. You'll see right here that the ES has been very bullish. It's been very strong. This is one thing I mentioned before, that this turnaround at the 200 was very bullish, and so far it has not shown any weakness. We've watched key levels for signs of weakness, but the market has never violated those levels. For example, 2980 was a level that I mentioned if it failed, it would rotate back down. It held and continued. 3020, another level I mentioned here, that if it failed, it would rotate back down. It held and continued. So it continues to honor these minor LVNs and market structure levels on the way up, which suggests more strength ahead. The other thing we've talked about is the 8-period average and how it continues to provide support in that bullish PIMA trigger zone. This market continues to show strength. One thing we were looking at Friday was how the market would respond above the previous month's high. At first it was showing a little bit of signs of weakness, but showing a tail above it, but it finished strong and now pushing through it. And again, no rejection, instead a continuation. And we could be looking at more strength ahead. Now, it's not how we start the day, it's how we finish the day. If by the end of the day we close below today's midpoint, that would be quite bearish. If by today's close we are below the previous month's high, that would be quite bearish. So again, we will continue to see how this plays out, but overall everything is still flowing to the upside, and pullbacks are currently buying opportunities on an intraday basis. If we take a look at the NQ, you'll see very similar price action, very bullish month of October here, and then we saw a continuation through recent highs. You have the 8K level here, which has been recent resistance, broke through it here. The retest was also bid. Here's the FOMC key level as well. That was bid right away and has continued higher. And so normally what would happen in that case is the market would continue higher until it finds rejection. Once it finds rejection, it will tend to come back to that pivot. But right now everything is still going higher until proven otherwise. We have the market continuing to honor the bullish PIMA trigger zone. It continues to honor LVNs on the way up. Everything is very strong right now until proven otherwise. But again, it's how we close the day, not how we begin it. But right now, everything trending higher at the moment. If we take a look at crude oil, you'll see right here crude oil continues to hold at highs and even advance after Friday's big gain. Friday had a huge gain where it rallied from the 54s all the way back above 56s. Right now, testing prices at 57, hitting a high today of 57.06. 57 has been a big time area of resistance here lately. It's sold off here, and now it's holding at it right now. Additionally, that's the 200-day average. So today's high is basically the 200-day average, which is 57.06. So this is going to be important to see how the market responds here. The last time it pushed above it, it was due to Saudi news, and then we filled back down and kind of held the key level down here. So we'll see how this continues to play out. As we know, that this market tends to be very bearish heading into the end, or throughout Q4 and headed into the end of the year. That has not really been the case so far. It's been mostly sideways to up. But again, if we see some sort of rejection here, it could lead to quite a bit of weakness here. So right now, retesting the 200 is going to be something to watch here from a long and short-term perspective, because if this price cannot hold above the previous month's high, it will return back to the previous month's close. Alright, lastly, let's take a look at gold futures. You'll see here gold futures currently trading an inside day right now, 40% of ADR, 6.3 points of range today. It's been averaging about 14.5 points per day. This one continues to trade below 1520 or 1525, that zone, and continues to trade above 1480 or 1465, way down here if you want to go that far down. But really between 1480 and 1520 has been the range throughout the month. You see an inside value relationship that has developed. So this is the previous month's range. The current pivot range for the month is inside this one. And right now, the first test at the pivot range bought. We have an inside day that's honoring the midpoint. Maybe there's going to be an attempt at an upside break. If that's the case, this thing would really need to get through 1525 to really make some noise and come back toward highs at 1565. If there's a failure to push through this level, then we likely come right back down to the other side of the range, or worse yet, get a push through lows. So again, we'll see how this plays out, but on an intraday basis, continue to watch 1510 for the most part. If it can hold 1510, perhaps there's a bounce higher toward 1520. If it can't hold 1510, it could get fairly bearish here. So we'll continue to watch this as it develops the rest of the session. All right, everyone, please join me tomorrow afternoon for the monthly market outlook for the month of November. And I look forward to seeing you soon. Take care, trade well, and I'll see you in the trading.